Good afternoon, everyone. Welcome back, folks. Hope we're all doing well on this lovely Sunday. If you guys can make sure you guys can see the DXY chart and the audio is coming through clear. Go ahead and get my notes pulled up. Yes, can see very well. Awesome. All clear. Thank you, Denisha, Francis, Joe. Thank you very much. All right, everyone. Hope we're all doing lovely on this fine Sunday. Hope you guys had a relaxing weekend. So we made it. We're finally into the month of February where my trading really starts to pick up full time on a lot of different fronts, right? I start trading more accounts, pushing more leverage, and I'm just picking up more activity in the marketplace going into the spring. Spring and fall for stock indices are, again, some of the best times of the year to be trading. So I'm really excited for these months to come. And I know you guys have been excitedly anticipating this as well. I think since we left off, when was that? It's like third week in November, I believe. So we finally made it. We made it to February, and we'll definitely start to see a lot of this price action begin to clean up moving forward, and looking forward to much cleaner delivery on indices overall. So with that, hello, Anita, Ahmed, glad to have you. Ahmed, NASDAQ played out perfectly. Great forecast last week. Appreciate you, Ahmed. Thank you very much, brother. Tyler, Joe, Jonathan, early retirement. Kieran, James, Scotty, hello. Anthony, hello, Adore. We meet again. Good to see you guys. Denisha, sending good vibes out to everyone in here. Much appreciated, Denisha. Frank, hello, Dylan. Hello, Frank. Tyler. Francis, hello. Awesome. Looks like we got a full house today. Mel, Matthew, Dylan, excited to be back. Happy to have you, Matthew. Olawale, Ahmed, awesome. Cyclops, Dylan's greetings. Trust you had a nice weekend. Sure did, Cyclops. Hope you did as well, my man. Mahmood, good to see you. Good to see you as well. Kingsley, yo, Dylan, at last February. Absolutely. Absolutely. So I'm looking forward to it. So with that, let's go ahead and get into the charts. So again, as you guys know, I do have a few exciting announcements today, one of which will be the giveaway. So before I share that with you guys and we get into that, I'm going to cover that after I finish my analysis and before the Q&A. That's what I heard from the marketing team. That's when we're supposed to do this. So after I finish with my analysis, I got a note card here, and I'll be announcing the two accounts that won the giveaway on Instagram and on Twitter. Again, that is a thank you and a show of appreciation from my team to all your guys' support. You know, everything you guys have done for us thus far. Again, we have an amazing community, and that's one of the things I always hear as great feedback from the people in our community, in a private community, but also people in our Telegram, YouTube community. Just we get all the time, we get overwhelming feedback about how awesome our community is, and that's because of you guys. So again, I want to say thank you for all your guys' continuous support. Got some Sonoma County Pinot on the desk to enjoy this primer before getting down to biz this week. Awesome, Adrian. Alrighty, guys. So as I said, I'll be announcing the giveaway winners before the Q&A, and got a few different things I'm going to show you guys here. You guys are going to also obviously see my usual analysis, right? The intermarket analysis with dollar, bonds, indices, and then we'll look at a little bit of currency for the Forex folks. I know it hasn't been too pretty for you. Well, I mean, it has been pretty for you if you've been here, right? If you've known we were in the consolidation, not to touch it. But moving forward, we do have some clarity in the Forex market, so I'll be sharing some targets and my expectations moving forward there. So we'll pick back up into the Forex side of things just a little bit and keep things moving smoothly. I also got some seasonal data stuff to show you guys. So I'm going to pull out one of the services I use, SeasonX, for seasonal tendencies. They're a great company, and I would recommend them. Don't get any kickbacks for that. They're just a service that's really good, and I use them. So I'm going to be candid about that. So with that, that's what's on the agenda for today. So we'll go ahead and get started with DXY monthly chart. Let me go ahead and get my notes up. Twisted, you guys keep it so professional. Appreciate that. Appreciate that. Testament to my amazing team. Monthly chart for DXY. So let's go ahead and get into the business here. So this was the monthly candle for January. So really muted month. It was just an inside month, which simply means we stayed within the previous month's high and low. So it's just an inside candle bar. So we stayed inside the previous month. So one of the things that tells me is we're going to have a very active month of February. Typically, again, because large ranges follow small ranges and small ranges follow large ranges. So seeing a small range January, I'm looking forward to a lot of volatility coming into the month of February. On that front as well, there's also a lot of things going on. How do I want to say this? Militaristically around the world, with different world powers fighting, more saber rattling, and the escalation of wartime talk. So I have to be careful with how I say things as well before YouTube puts me in timeout. But the reason I bring those things up, not because it's my favorite topic to discuss, but because as speculators, as people that are investing in these markets, it's very important to be aware of what's going on in the geopolitical part of things, because that can throw the markets into a very frantic delivery to reprice the levels, because unfortunately the people that control the marketplace, they use the sentiment from big world events, geopolitical events, and they use that as a smokescreen to run to targets that we would look for even more aggressively. So there's a lot more intervention, a lot more manipulation when geopolitical events are going on around the world, because again, those market makers use that sentiment for their advantage in these markets. So understanding all that, it's very important, again, to be abreast as to what's going on the world scene. Again, not be overly concerned with it, because again, the open, high, low, and close is going to tell us everything we need to know. But I don't want to be blindsided by escalation of war or whatever the case may be in different parts of the world, and then you just have no idea why you're seeing certain things reflected in certain asset prices. So I say all that to say, monitor dollar, because it's especially sensitive to saber rattling and wartime discussion. So I'll get a little more into that when we get into the lower time frame, but expecting a tremendous volatility in the month of February because of everything that's going on. And I also say that to say, when we open at 6 p.m. here on Sunday, we could see a jarring gap open, either higher or lower, because again of more U.S. military involvement in parts of Iran. So the Sunday opening can also be a wild card. And the reason I say that is because what you guys may not know, and I'll just discuss this briefly and we'll keep it rolling. On the 3rd of January, 2024, Iran, which is one of the founding members of OPEC, they joined the BRICS Alliance. The BRICS Alliance is, you guys can look that up on your own. So they joined the BRICS Alliance, and Iran is now aligning themselves with Saudi Arabia. So with the BRICS Alliance, that presents a direct threat to the US dollar reserve status. So what does all that mean? Well, the US dollar has remained the world reserve currency because of one thing, right? Because of the agreement between the US and OPEC nations, which guarantees that the United States military is going to defend oil belonging to OPEC nations. Why is that significant? Well, because if the United States military is willing to defend OPEC nations' oil, what does the U.S. get in return? All their oil is priced in dollars. So they have to transact their oil in dollars. If you ever heard the term petrodollar, that's what that means. So the reason the dollar is where it's at in the standing of things, the reason it's the world reserve currency, which is the number one currency, it makes the financial system go round. The reason that is because the U.S. military involvement in different parts of the world, right? So what's going on with Iran, U.S., not going to go any deeper than that. That should give you more than enough of an idea of what we're looking at and why. But if you want to dig in and do your own research, the internet is a wonderful tool. But I say that to say, when the United States gets involved in wartime operations, that is going to move the dollar a lot more than normal. Because again, there's a knee-jerk reaction, not because traders are buying or selling, but again, they use that sentiment to reprice the markets more aggressively. So one thing to be conscious of in dollar moving forward and all asset classes is what's going on in Iran and how the United States is launching attacks against them. So if we start to see escalation on that front, we can start to really see dollar begin to accelerate higher because of what it is that I was touching on. So because, again, Iran's joining the BRICS nations, well, that's a threat to what? The US dollar, right? Because the United States, the reason we have that in place is because oil is very important. I can't think of one single economy that doesn't run on oil. Every single economy globally needs what? Oil. So if they need oil and oil needs to be paid for in dollars, what would that make sense that every economy would also need? Dollars. So now you guys see why the dollar is so important in our financial analysis, because of it being really the linchpin of the entire financial system. So many of you guys probably didn't know that, but you got it anyway, no extra charge. So I'm looking at that moving forward because that's going to be a huge sentiment disruptor, and they can use that in price delivery. So if we start to see escalation, something to keep in mind, we can see dollar really start to accelerate higher with what it's already doing. So just some things to keep in mind and what I'm going to be monitoring moving forward as well. So monthly chart, we've been in this range here on the monthly chart as we've been discussing. And what I've shared was I want to break out, not like I want to see us break out and trade the breakout higher or lower, but we need to expand out of this consolidation. But right now we're still in this tight range, so I have to just take it day by day, week by week. So what I'm seeing right now on the monthly chart is I'm favoring an expansion into this fair value gap. So we have a fair value gap above market price. We're seeing bullish institutional order flow on a weekly and daily chart, which we'll get into as we drop down through the time frames. But what I'm looking for just on the monthly chart is this monthly fair value gap, and just taking it step by step, low hanging fruit targets. And then I'm going to want to see, how do we trade at this monthly fair value gap, right? Do we get up to the midpoint? How do we trade there? Do we get up to the high end? Do we close above it, right? All those different things are going to tell me different things if and when we get to those price levels. So right now, just expecting us to trade higher into this fair value gap. And then again, how and when we trade there will be influential when that occurs. So remember, the two blue lines here are the monthly volume imbalance. We've been watching that level. Look at the candle close January, perfectly closing there and perfectly opening there. So just a really nice delivery. And we'll see how the market was just gravitating around that level almost for the entire last 2 weeks of January. All right, so all right, weekly chart, go ahead and zoom into this further. So we've seen the market drop lower, trade into a discount, and then call the market higher into this weekly fair value gap. And then I wanted to see how we traded inside this fair value gap. Once we saw that we got a closure above it, this made me more bullish than bearish. And then we've seen they use that inversion fair value gap here as support. And then one of the other levels that I told you guys to monitor moving forward was the weekly bearish order block mean threshold. So this line here is just denoting this entire up close candle, that range, and extending the midpoint out further. So what that level is, that's mean threshold. That's a significant level in an order block. So the fact that we closed above it is bullish. That tells me we're likely going to want to run for these equal highs. Above those equal highs, we have inefficiency here. So I'm not highlighting the entire, what would be seen as a fair value gap. I'm just highlighting where the inefficiency resides, which is this candle's high, this candle's low. So through these equal highs, we can dig up into this weekly inefficiency. And then how, again, and when we trade, there's going to be influential. So right now I can see price gravitating into that level, and then how we trade there again is going to be significant. Do we get above it, use it as support? We likely continue higher. If we hit it and sell off, then we may have to readjust and look for lower prices. But again, just for right now, looking for a run into these relative equal highs on the weekly chart, just seeing the bullish signatures, finding support at the inversion, bearish order block closing above the midpoint there. So bullish signatures indicating, from what I can see right now, the next candle is likely to expand higher. But again, with everything going on in the world right now, as I started this live stream with you guys discussing, things can change very, very quickly. So it's important also to be able to adapt to what the market's showing you, especially in a climate that we're in right now, which has never been harder for traders. There's a lot of things being thrown at these markets to speculators, and those are all very important things to keep in mind moving forward. We're also in an election year, so what I would say is fasten your seatbelts. All right, so let's drop down to that daily chart. All right, so let's work that daily chart. So again, keeping in mind what these levels are, right? The two blue levels are the monthly volume imbalance, and then the black line above that is the weekly bear shorter block mean threshold. So we were just we gravitated up into the monthly volume imbalance, but now we've been consolidating there for some time. So what I'm going to be watching now, seeing how we found support at the midpoint, right? So this daily fair value gap, consequent encroachment, like the body's respecting that there, very nice. And then we finally displaced higher. So for those of you guys that were with us last week, you guys remember me sharing that this is the week I favored we were likely going to leave the consolidation. Why was I able to suspect that? Simply because the economic calendar, right? So whenever we have specific high impact news drivers, they're going to be catalysts for price to do certain things, because price isn't going to do anything that it's not time for it to do. So seeing that Friday we had non-farm payroll, we finally left this consolidation. So very happy to see that now, because now we can start trading with more clarity in the intermarket analysis side of things. So looking at dollar on the daily chart, again, we can see this daily fair value gap finding support at the midpoint, and then we see an expansion higher, and we've left this range now. So what I'm looking at on the upside as a target would be this high here at the 104.263 level. And then above that, we have minor buy side here on that daily chart at the 104.55 level. And then above that, we have all this inefficiency here on the daily chart. So above these highs, we have this inefficiency, and that's what I'm going to be looking at going into this week. If we start to get aggressive acceleration higher on dollar, and it starts to aggressively reprice higher through these levels, then we could, again, trade up to the high end of this inefficiency. If we trade through that aggressively, we have buy side here. And then above that, we have these relative equal highs. So just based off what we're seeing right now, that's what I'm looking at. But again, we still have to take it day by day, week by week. But as long as we remain above Friday's low, I'm bullish. And this is also a balanced price range because it's a consolidation, worked it back and forth. So we've left and traded above it now. So there's no reason for us to get back down below this balanced price range if we're going to be bullish. So that's what I'm looking for on dollar. And then we'll drop into the 4 hour. And then 4 hours, just again, a refinement of that daily chart. And here we can see the equal highs even clear. And then relative equal highs here, even clear. Let me put the crosshairs on because let me make sure. Yeah, I know the crosshair is easier for you guys to see. So again, this is just a refinement of the daily chart, and then we have the relative equal highs here and here, and then above that we have all this inefficiency above. So that's what I'm going to be looking for early in the next week, and then how we trade at those levels will give me the information I need to then know where we're going to move forward from there. So let's go to the bond market, finally getting some movement in bonds so we can start confirming what we're seeing in dollar with the bond market. That's not the right one. Okay. All right, so weekly chart for T-bonds. We hit this weekly fair value gap here in a premium. Let me go ahead and label what I'm referring as the premium. So from this range high to this range low, we traded up into a short-term premium. We hit the fair value gap, and then the market sold off. And then we had this fair value gap here. So I wanted to see how we traded in that fair value gap. We ended up closing below it, which is a weakness signature. So because we were in a consolidation on the daily chart, which you guys, I'll just drop into that right away. I really wasn't able to peg a direction in this structure because I don't have clarity on the weekly daily chart, which again, as I told you guys, I didn't really need because we're in January. We're just now getting into the month of February, which is really when the real action starts. So looking at this weekly candle here, reading the order flow, looking at the signatures that the algorithm's communicating, I like this close here. Market tried to rally, swept above the bodies, so trade up into that rejection block, which is the highest up candle or highest body, trades up into that, and then we reject. But look at where we close, closing right below this up close candle's opening price. So that close right there indicates to me that this market is likely bearish because it was unable to get above that level. So that would be further confirmation if we start to see this T-bond sell off into the respective weekly fair value gap in a discount. That's going to allow dollar to get lift and reach its premium targets. So I like this signature here as long as we remain below this inversion fair value gap. and really this candle's high, I'm going to remain bearish on this market. All right, daily chart. We'll go into yields and we'll just keep it rolling. So daily bearish order block, the last 2 consecutive up close candles before the rotation lower, right? So bearish order block, trades up into that, body's respecting that level, and then the market trades lower. So what I'm going to be monitoring moving forward, so again, as I said, I'll be bearish on this market as long as you remain below this candle's high. If we get above Thursday or the previous week's high, then I will have to readjust my stance and look for higher prices and just adjust again to what the market is telling me it's doing. But for right now, based off the present structure, I favor a run to the sell side here and here. And then again, that would allow that upside lift on the DXY. So we have these fair value gaps here, 1, 2, 3. So if we are going to be bearish, if we are going to sell off, I want to see us get below these fair value gaps, use them as resistance, like a ceiling, and then sell off and run for the sell stops. And again, that's going to further solidify the risk off bias that we're seeing in dollar right now. So that's it for T-bonds, and we'll go into the yields and start from the monthly chart. So monthly chart across the yields, we've been extremely bullish on yields, right? So as you guys all know, interest rates have been through the roof. So what we've seen is a retracement down into the bullish order block. So the last down close before the expansion higher. Hold on, let me zoom in into all these, make sure you guys can see them clear. Again, we retrace here into the down close, retrace here into the down close. So if this market is going to be bullish, which is what I'm expecting, I'm still expecting longer term bullishness in the yields. All I'm seeing this as is a retracement for a new discount to set up the new leg higher. I'm okay with being incorrect in that analysis, but again, I'm just going to keep trading the underlying order flow, not going to look to call a top in this bullish market. So that's what I'm looking at on the monthly. Weekly chart, same thing. We drop down into a discount, so we're trading in a range from, we'll just go ahead and look at this one because they're all pretty much the same. So we're trading in a range, and now we've dropped down into that discount. So what I wanted to see was how we traded in that discount valuation. That's what I was reading into these past few weeks. So seeing that the market traded into a discount, and then we tried to rally higher, but we were just really in a nasty consolidation here and here, which is why we were seeing that consolidation on dollar. So if you guys want more clarity on dollars for your currency trading, you want to take a look at the yields or the T-bond market. And then the other thing I was monitoring here is we got a critical SMT with the yields. So this is the yield triad. This is what I call the yield triad. And it's the 10-year, 30-year, and the 5-year yields. And I'm constantly measuring the order flow and the institutional market structure in these respective assets to give me clarity on the DXY. So looking at the low here, we see 10-year did not make a lower low. 30-year did not make a lower low, but the 5-year did make a lower low. So that Kraken correlation or that SMT divergence is indicative to me that institutions are using this discount, using this run on stops to buy. And the fact that these did not make a lower low respectively indicates they're under accumulation algorithmically. So if this SMT holds and we start to rally on the yields, that's what's going to provide that lift in dollar and give us that further confirmation for what it is we're already looking for. And then another thing I wanted to add to the analysis on dollar, which our associate Tommy has been handling very, very well. Great work there, my man, with regard to the COT reports. COT reports have also been bullish for dollar. I don't use COT reports as a standalone thing, and as they should not be. But in addition to understanding institutional market structure, understanding order flow, draw and liquidity, once you understand those things, which is the fundamentals, the basics that you need to know, you can start using more tools like COT data, using seasonal data. So you guys are going to see how a lot of this is starting to come together as to why we're calling higher prices. Because the COT data is bullish, the commercials are net long. The seasonal, as we'll, yep, I have that up. So we'll look at the seasonal tendency for the month of February for dollar, which is also bullish. And we have this very significant SMT occurring in the yields. So if we start to see upside on yields, you guys can now see how a lot of this starts to come together to form the high probability that I was showing you guys all year last year. So these are all the things that are going into my analysis whenever I'm calling targets or I'm doing these Sunday pre-market outlooks for you guys. So SMT there, we want to watch if that holds moving forward. I suspect it will, but again, if it fails, then that would tell me something else. And again, we'll just readjust to what the market is showing us. So here on the daily chart, we can see that SMT much more clearly, whereas the 5-year yield reached down for these relative equal lows. 30-year, the 10-year were unable to. So if we start to see acceleration on the upside into the buy side and start reaching into a deeper premium of this range here, then again, that's going to give me a lot of confidence to continue calling dollar higher and currencies lower moving forward. And then indices, they're in a bit of a interesting spot right now, and we'll touch on that when we get to indices. So just going to touch on euro briefly, not a whole lot to talk about. So that's a daily level. All right, so looking at this weekly chart, we're clearly seeing weakness on euro. So what I can see right now in the current structure is a run below this low here, the sell side liquidity there. So that's not that big of a run. Well, we have been in a consolidation. So I'm looking for a run to that sell side. And then how we trade there is something I'm going to want to see. Do we accelerate through that low aggressively and continue selling off, running for this sell side? Or do we sweep that low, reject, and pull back into the range? I don't prefer to see it do that, especially if we start to see nice expansion higher on dollar. I suspect euro will start to crater, but we have to, again, take it day by day. So we have the sell side there. How we trade there is going to be influential, and that's going to tell me whether or not that it warrants a run below this low here. Daily chart. So euro's been dropping, but it's just really been working its way lower in a very high resistance manner. So here we have this daily inversion fair value gap. The reason I'm qualifying it as an inversion fair value gap was because this signature right here, when we closed below it. And you see we trade back up to the high end. Where did the body stop? Body stopped perfectly at the high of that inversion. Telling us what? That the market's weak, right? The wicks can color outside a little bit. That's fine. But when it comes closing time, or for the bodies to show me the narrative, this is what I'm looking at. And then we see the bodies respect that, and then we get the sell-off. So again, all depending on dollar. If we continue to see higher prices in dollar, I suspect euro will easily drop into this sell side here. And then if we start to accelerate through that low, we'll likely run into this sell side here. And then through that sell side, we have the daily inefficiency. So these would be my targets on the downside. Again, assuming we get that lift in dollar. And then pound, nothing for pound. And the last thing, so what would invalidate this bias? I like to give you guys the invalidation level as well. So this is what I suspect we're going to do. These 3 targets on the downside and that inefficiency. But the invalidation level would be this candle's high right here. There's no need for us to get above Friday's high for 3 reasons. 1, this is a high that took out sell stops. So that's significant, number 1. But 2, this is a inversion fair value gap that's been efficiently delivered. You see how it's worked this level multiple times and we've left it? So now that also becomes a balanced price range. And then obviously all the back and forth delivery also makes it a balanced price range. So there's no need for the market to get above it if we're going to remain bearish. And if we do, then that's going to communicate something to me that we're likely not bearish. And then again, I'll just have to get in line with what the market's showing. But that's what I'm looking at on the downside. But again, as long as we remain below these key levels on euro. And then, yep, I think that was it. So I'll take questions at the end. I know we have quite a few new people here. I should have mentioned that at the beginning. So the way that usually this works is I'll go through my analysis, share with you guys what I'm looking at for this week, what I'm considering, and then I'll do my best to get to your guys' question at the end. All right, so let's get into dollar. Got to go through my notes, make sure I covered everything I want to. All right, so let's start from the weekly chart here for E-mini S&P. So we've been seeing higher prices. Again, we've been calling this market higher under the context of telling you guys several times, I don't want to call a top. I don't want to do it. It's not anything that I see as a fruitful endeavor. So I keep trading the underlying order flow, which has been bullish, right? So we've been looking for higher prices ever since we started this year. So January, except the first week. The first week I did call that lower, but I don't even think I was on YouTube then. I think I was just calling the market lower to my private Discord community. But yeah, that's right. Because then the first week I started was the second week of January. So yeah. So since I started here with you guys, we've been calling indices higher. And then we've seen the nice expansion each week higher. So with what we're seeing in the present order flow and the present market structure, I'm not going to try to short this thing. So trying to short a bullish market that's in a commercial bull run, it's like standing in front of a train, right? There's no point in doing that. Just trade the underlying order flow again until the market shows its hand and your buy models start to fail you. So looking at the current order flow, which is bullish, we have the weekly fair value gap hitting that midpoint perfectly, just a perfect delivery there. Then the market expands higher. Weekly fair value gap, we traded down into that. Institutional order flow entry drill for our low of last week on Friday. And I think, yeah, I was on a YouTube live stream, so we had the pleasure of nicely walking it down into those targets live on the YouTube. And then we got the expansion higher, closing near the high in a bullish week, which is what we'd expect. So institutional order flow trading into this fair value gap, but not to the midpoint, and then the market's off to the races. So again, this market is still bullish. As you guys know, I like intermarket confirmation with dollar and ES, but sometimes you have to let them do what they're going to do, right? Which is dollar's bullish, and right now indices are bullish simply because I don't want to call it top. So what that indicates to me, as an analyst, is they can do that. Again, one of the things I'm going to reiterate to you guys here because it's important. A lot of you guys that come from currencies come from Forex. You guys may think it's the one-to-one from like dollar to euro, which is dollar ticks higher, euro ticks lower. Whereas with indices, it's a little more complex. There's still intermarket analysis, right? Don't get me wrong. If dollar continues rallying longer term, that will absolutely put pressure on the indices at a medium to longer term time horizon. But they do not need to be one-to-one. As you guys can see, ES expanded higher last week, and dollar also expanded higher as well. Right, so they do not need to be one-to-one, as I covered. I know I covered it on Discord with you guys, with my private community. I'm not sure if I said that on YouTube, but whatever. I'm saying it again. So these do not need to move one-to-one like euro and dollar. They can continue to trade higher. But what this is telling me, which is again what I'm going to go into here, is that these rallies on indices, if we start to see serious acceleration higher on dollar, these could start to be suspect rallies on indices. And then we could potentially start to look for our premium arrays to act as resistance. If we get that breakdown lower, that would again just be the algorithm tipping its hand that we're seeing a break of structure lower. So until we get all those things come into the market structure, I'm going to stick to my guns and keep calling this market higher. And again, just for the sake of avoiding standing in front of a freight train. So still seeing higher prices. And then I'll also tell you guys when we get into the lower time frames, what I'm going to be looking for on those time frames to confirm a reversal if and when it does that. But for right now, trade the underlying order flow and don't stand in the way of a freight train. I'll go through ES and then I'll just go through NASDAQ. I think that'll just be the easiest. So these levels are just from the previous weeks, but again, we've been calling this market higher. Weekly fair value gap, consequent encroachment, expansion higher, retracement into the fair value gap, and last down close, but that digs into the sell stops. So that's what high probability bullish order block. Trades into that bullish order block, called that low of the week. There on that week, I remember this very specifically because we had these relative equal highs. So really easy to see that. Market's off to the races. So looking at the daily chart for E-mini S&P, we have this expansion higher with all these up close candles, up close delivery. So we saw a rotation lower last week into the inefficiency, more specifically that weekly fair value gap. And then look at the bodies there, finding support at the high end of that inefficiency. So just a beautiful delivery, and then the market expands higher Thursday into Friday, reaching for deeper buy side. And then Friday, that last down close, after we traded through that opening price, working that opening price for accumulation for the expansion higher for E-mini S&P. So as of right now, I'm looking for higher prices. What would change that? If we start getting below this daily bullish order block, these are why I have these levels, so you guys can have them on your charts. Because typically the levels we have on our charts, the algorithm tends to use those levels, in intraday delivery throughout the week. So you definitely want to have the levels I'm making available to you guys. And then more importantly, listen to the narrative by which I'm giving those levels to you. So it's not just enough to have all these random levels on your chart. You need to have a narrative as to how you're even going to use those levels, which stems from the higher time frame. So daily chart, bullish order block, using that as support. Again, not going to call it top. But what would tell me we're reversing is if we get down through this bullish order block. So if we violate this down close candle here, I would then look for the inefficiency and look for the sell side here and here on the downside if we start to accelerate. But again, as long as we remain above this daily bullish order block, I'm going to continue trusting buy models and looking for higher prices in indices, even if the dollar is rallying. And then we'll drop into the hourly chart. So again, just been seeing bullish order flow. So a drop down into sell side liquidity, sell stops here, sell stops here. That creates what? New buying opportunities, especially when we trade into a discount and then we get that SMT with ES, NQ, and the Dow. So Dow makes a lower low while ES and NQ are unwilling to do so. And then we get what from discount? Aggressive displacement higher, which indicates to me the market is bullish. And then we run for the buy stops here. So again, just sell stops to buy stops, rinse and repeat. Just doing these same things every week based off time. So making that low a week on Wednesday, which was FOMC news driver. And then that SMT again just is the nail in the coffin to seal the deal. Expansion higher, consolidation, selling what? A bull flag, right? Retail traders see that as their bull flag. Then they send it higher and then they drop it lower on the non-farm payroll release. Classic two-stage delivery, they take it higher. So what I'm going to be looking for now that we have some context for what's transpired, this is what I'm going to be looking at for the hourly chart. So I want to see how we trade above these highs here, right? So this high here was a daily swing high. Do we start to get aggressive acceleration through that on the upside? Or do we trade above this level, reject, and sell off? Because if we reject above the buy side and sell off, well, then that would indicate to me that this run higher was just a turtle soup fake run higher to then sell off to get in line with the bullish dollar and the risk off, or excuse me, risk on. No, man, I'm all backwards. Sorry, a long day at the gun range. So coming here a little tired, a little late. But so dollar is trading higher. So that's going to put pressure on indices. So we will see that materialize across the indices if we start to get that acceleration lower and we don't displace above that high. So what I'm monitoring is how we trade at these key levels for insight as to what this market wants to do moving forward. And then we'll touch on NQ. Let's go up to the weekly chart. So same thing for NQ, so we'll go through this one a bit quicker. Bullish order flow, calling this market higher. Trades down to the weekly fair value gap. We see bullishness, market trades higher. Weekly fair value gap here, I took our attention to this level here, this weekly fair value gap. We were watching this last week. And then usually I just give you guys the level and then, you guys should know what to do with it. But I even made it easy on you last week. I told you guys, well, what key levels do we look at within a fair value gap, right? We look at the upper quadrant, midpoint, lower quadrant, and then obviously the high and the low of that respective inefficiency. Well, what do you know? Where does that low a week priced in at? Again, right there at the levels that I have on my charts that I'm making available to you guys here for free on YouTube. What levels the algorithm's going to be using for that week. Weekly fair value gap hits that, nails the low of the week beautifully, and then we get that nice Thursday into Friday rally. So what I'm going to be interested to see here is we have relative equal highs on the weekly chart, but again, still seeing continuous bullish order flow. So we'll refine this on the lower time frame. So as of right now, be looking for the weekly candle to expand higher. But again, how we trade at some of these premium levels is something that we're going to have to monitor. All right, so daily chart for NQ. Market's been rallying, trading to short-term discount of this range here. Short-term discount, market explodes. Also, what I have annotated here is the dealing range from premium to discount. From this candle's low, let me put on the crosshairs, sorry. This candle's low, this candle's high. That's what the dealing range is anchored to, right? So for private students, you guys already know, market trades into a discount. What do we want to see the market do if we're bullish, which we are, right? It's going to aggressively expand higher, not mess around. So again, doing the same things, again, that I'm teaching you guys, and what I'm teaching you guys are the tools I'm using for my own trading day by day, right? So it's just a matter of just getting experience with how I'm using all these things day by day. And then over time, you guys are going to be able to do what I'm doing. So daily chart, this is that weekly inefficiency. So this blue rectangle, let me start to clean this up. So you guys can see the premium, the discount. You guys can see how we perfectly repriced into a discount for the purpose of what? Interbank traders accumulating new long positions at a random level? No, at the key level I had on your guys' attention before we even started trading for that week, which was the weekly fair value gap and then the midpoint. Bam. So let me go ahead and clean this up. So what's this phantom trend line? What's all that about? So one of the things I'm looking at here, I do not have an affinity for this, right? I'm not buying because the trend line showing support. What I'm interested to see is we have relative equal highs here. We have a phantom trend line being created now, which retail trusts as support. We have a bullish dollar with several factors as to why that's going to likely reprice higher. So how we trade above these relative equal highs that we have here now is going to be very influential. And that's something I'm going to be monitoring moving forward. Do we trade above these highs and displace higher? We continue trusting our buy models and looking for higher prices. But if we trade above these highs, reject and sell off, we're likely going to want to eat up into this trend line liquidity, and we'll look for this middle level between the 3 touches on the trend line. Number 2 is that sweet spot for the liquidity. So if we trade up higher, turtle soup, false break above the highs, reject, sell off, I'll be looking for sell side on the downside. But if we trade above this high and displace and show more bullish institutional market structure, then I'm not going to fight that trend. I'm going to stay in line with what the higher time frame institutional order flow is and keep trading in line with that. So that's what I'm going to be monitoring here on the daily chart and the different scenarios I'm going to be looking for. So again, leaving this discussion here, it's not me being 50-50. It's not me calling both sides of the marketplace. I'm calling very specific targets, but I'm also giving you guys the conditions that would make me bearish, that would make me bullish. And that's something that I would appreciate a lot more, right? As opposed to saying, okay, this is what the market's going to do. Here you go. Instead, I'm giving you guys a very comprehensive analysis that you guys can go into your own charts and study. Okay, is it reacting off these levels? What's it doing at these key levels? And what's that indicating that it's going to deliver moving forward? And I'm making all that available to you guys here. So NASDAQ, we see that SMT after, again, trading into that discount and that blue rectangle, which is that weekly fair value gap. Then we got the repricing higher. And then I don't think, Abraham told me, I don't even think we sent this analysis to the Twitter, Telegram. I think we just sent that to Discord, I think. But whatever. Going into Friday, I was bullish. I was looking for higher prices into the buy side here, and previous week's high. Fell just short of previous week's high, but again, as long as we're trading in that direction, all is good. So I was calling higher targets on Friday based off all these other factors we were looking at here, but I said it's an influential level. So again, what does that mean? So I want to see how we trade at these levels. Again, just what I showed you guys on the daily chart. Do we trade above it, displace higher, or reject lower? Those are the different things I'm going to be reading into Monday, into Tuesday next week, just to really get that analysis moving forward. Because once we get that quarterly shift, which a quarterly shift is every 2 to 3 to 4 months, really 3 to 4 months, but it can be as little as 2, a new direction typically unfolds in the marketplace. The reason being is because of fund level traders, but I'm not going to get into all that right now. But it's basically attacking the fund level stops that reside on these higher time frames. So every 3 to 4 months, we can expect a change in direction, and we've been seeing continued bullishness. So if we do reject and sell off and start breaking down, then that could give us, again, our quarterly shift bearish for the next few months. But again, if we continue to accelerate higher, I'm not going to look to stand in front of that. So not calling a top, but again, we want to monitor how we trade at these key levels. Election year 2008, indices drop like a rock. Yeah, it'll be very interesting to see what they do this year. That's why I said at the beginning of the call, it's going to be an interesting year for traders. So definitely fasten your seatbelts and prioritize that risk management. So that's it for everything I had to share here. So I'll go ahead and get to the giveaway winners. And then I'll go ahead and take as many questions as I can before it's my time to get out of here. Alrighty. All right, so 2 winners. Again, as you guys know, we did 2 giveaways, one for the Instagram and one for the Twitter. So I appreciate all you guys that participated in that for your chance to win a 50K account giveaway from Top Step. So for Instagram, the winner is CS Cadet. For Twitter, the winner is I Am Cyclops. So for those of you guys that won, congratulations, and thank you very much for your continued support. It's greatly appreciated. So what you guys are going to want to do now to claim the giveaway, you're going to want to send your first and last name and your email address to us from these accounts on Instagram and Twitter. So 3 pieces of information, first, last, and your email address to Instagram from the Instagram winner, and then Twitter to our direct messages on Twitter. And then I'll have my team get back to you and let you know what the next steps are for you to claim your funded account. So congratulations, and better luck in the next one for everybody else. We'll look to do more of these. I'll have to get in touch with our affiliate company and see what they can do for us. Tell them I got a lovely community that I want to take care of. So we'll see what I can do on that side moving forward for those of you guys that weren't able to win this one. But again, huge appreciation for all your guys' continued support. James, why does rising dollar mean bearish for indices? That's a good question. So that's something that I've covered before, but that's a pretty, how do I want to say? I don't want to say like it's a basic question, because it's not. I mean, especially if you're not, too familiar with the financial markets. So I'm trying to think how I want to articulate that. The reason the dollar is so important was because of what I covered. Yes, sir, Kristen. Congratulations, my man. Congratulations. The reason dollar is so important in the financial system is because it is the financial system, right? The dollar is the reserve currency. So what does that mean? Well, before, money used to be backed by real stuff, gold, silver, metals. But now currency is backed by nothing. It's fiat. It's backed by debt, which is nothing. So the reserve currency means, which reserves used to be gold, but now reserves are held in fiat currency. So country A wants to print more dollars. To do that to print those dollars, they need reserve, they need currency backing the new currency that they're printing. And then that would be dollars. So every world economy, every bank needs to hold dollars as a reserve. So it's very important to understand just that piece right there and how significant dollar is across the entire financial system. So now as traders, we use dollar for risk on, risk off. If the dollar is being bid higher, if it's rallying, that means money's flowing into dollar. So you have to understand capital inflows, macroeconomic analysis, and understand where money is flowing into what asset classes. And if it's flowing into dollar, money has to be coming from somewhere, which would either be risk assets, foreign currency, commodities, or stock indices. So you might want to listen to that one a few times, but that's what you need to know. And then, like I said, the internet is a wonderful thing to get more information from if that's something you want to invest in. All right, all right, guys. So let me go ahead and look to get to you guys' questions. Thanks for the support, Christian. Much appreciated, brother. And I know you're killing it. I've seen you on Telegram putting in the work, brother. So I'm really looking forward to seeing you shine, brother. Keep up the good work, Christian. All right, let me make sure I'm able to get to everybody's question. Hey, Mel. What's going on, brother? Glad to have you. Olawale, happy Sunday. Ahmed, hello, hello. Kingsley, you promised that you would talk about your revenge trading last session. Okay. I did tell you guys I would talk about revenge trading and how I overcame that. So here's what you want to do. Very simple, very straightforward. All right. Make sure you have a notepad out. You want to risk very little, because if you risk very little, the outcome of the trade isn't going to be significant, right? It's not going to inspire emotions. It's not going to make you an emotional trader if what you're trading you can afford to lose. If you're trading money you can't afford to lose, well, you're just in a very difficult situation, and I wouldn't even recommend trading for a person that's in that situation, because unfortunately, I've seen this countless times, and if you're in a difficult financial situation, trading is just going to exacerbate that and not be the answer. Unfortunately, that's just the way trading works. Why it works like that, I have no idea. And I've seen a lot of stuff in this industry. I've seen, won't go into all that, but trading is very hard for some people, and some people have even, lost their lives because of it, because of the financial situation it's put them in. So that's why I'm very respectful of the risk, and I'm very conscientious of the influence I have here, which is why I don't promote stupid shit. I don't promote gambling, and it's always risk management and doing the right things, because I understand that, this is something very serious. But to answer your question, to help revenge trading, to help doing all the issues that we have emotionally, size down, because that's what's going to remove the emotional factor in your trading. Hopefully that covered your question for you, Kingsley. Appreciate you reminding me. I remember you were in the last one asking. Greetings from Zambia. Greetings. Hey, Rich. Good to see you, brother. Ahmed already learned something new, and the analysis did not even start. Love fundamentals. Awesome. Neuron, what about New Zealand NZD USD? Let's take a look at a little bit more currencies. Haven't looked at these currencies in a while, especially since the dollar's been a snooze fest. But now that we're starting to get movement higher on dollar, we'll look for lower prices on New Zealand dollar. So what I'd look for is all the other key levels that we know to look for. So we have the sell side here. It actually ran into that. Nice. So you'd want to layer out your sell side liquidity pools like this. So there's sell side there, sell side here. And then through that, we have all this inefficiency, and then we have the sell stops here on the downside. So if we start to get lift on dollar, I would look for Kiwi dollar to reprice into its respective discount sell side liquidity pools, as long as DXY is reaching for its respective premium levels. Clean charts, thank you. Do you monitor TLT along with ZB bonds? ZB bonds and the yields, that completes the method for me. So I don't need to incorporate that into my analysis. But if it is something that's helpful for you, that's fine. What you guys are seeing here with what I'm doing, it's a result of a lot of learning, a lot of studying that I've distilled down into what you guys see me doing, right? And it wasn't just ICT. Credits to him for algorithmic price theory. A lot of what it is I do now is from him. But what you guys are seeing with what I'm doing, it's a refinement of a lot of different things. Not that I'm mixing other things in with ICT or bringing other concepts in, but I'm bringing in a lot of experience and a lot of experience and learning I got in other fields of the markets that translates into what I'm doing. So you guys are seeing a distillation of what I'm doing here, of years of experience learning, studying, and researching a lot of different things. So what I'm doing, again, is comprehensive and is detailed, and it's not for everybody, because the level of precision that I have, it takes a lot of work to get to that. And I'm not gonna, lie to you guys. Do you need this level of precision to be profitable? Absolutely not. But if you want to be a freak, if you want to be extremely precise, know why you're doing what you're doing, you're in the right place. Lobo, morning. Good morning. It's Adadora trading. When you see an algorithmic signature like weekly fair value gap on ES being respected, 50% level, would you then simply want to see the market move higher the rest of the week? Yeah, well, it depends on the underlying narrative. If we're already bullish, if it's trading into that weekly fair value gap midpoint at a specific time, and then we get specific signatures there, like we covered, and we get specific signatures at that level, which would be like a SMT divergence, and then we get a displacement higher, well, all that would tell me then I can trust my buy models moving forward. So hopefully that answers your question there, Twisted. Juan, election year, absolutely something to be very, very conscious of. A lot of manipulation in election years. They love to use the rah of elections to really reprice these markets aggressively. So it's good for us as traders, but interesting to watch from the sidelines. I'll just leave it at that. Cobra, did you trade on Friday? It was very clean. It was clean. It was clean. Yeah, Friday was pretty nice delivery, and I did do some damage on Friday. Matthew Davis, turn that frown upside down and keep it moving, brother. Joe, thanks for the analysis, bro. I appreciate it. Very on point. Thank you, Joe. Denisha, congratulations to the winners. Yes, congratulations. Scotty, thank you for your analysis. Pleasure's all mine, brother. Thanks for joining. Matthew Davis, there you go. Because if you want dollars, you need to sell your stocks, James. Absolutely. There you go, Cyclops. Congratulations. What are my thoughts on oil? Yeah, let me go and take a look at oil. I did get oil wrong last week, and I'm okay with being candid about that. So what I wanted to see last week was a run into the buy side. I saw these relative equal highs here, and I wanted to see the market just stab up into that. And then I wanted to see if we rejected and resume lower. But zooming out on oil, look at the weekly chart. There's a lot of sell side liquidity below here, all these stack lows. So I think they're going to take crude oil to the moon, especially with everything going on around the world with geopolitical events, saber rattling, things going on with oil countries. And again, none of this is political, and I'm not open to debating any of this with you guys. I know sometimes like I bring this up and some people have their own ideas, whatever. You know, I'm not interested in debating any of this or discussing, you know, my viewpoints. It's just how I look at it and how I'm using it from a trading perspective. So keeping everything professional, everything down to business. I'm not here to discuss like different beliefs or anything like that. I know that they use crude oil, they use these markets in conjunction with wartime events. And that's all I'm saying here. What side, all that, I don't want to get into any of that discussion. I'm not here for it, right? We're here to make money and make a better life for ourselves and our family. And anything outside of that is a distraction. So with that being said, understanding what's going on with the escalation of war, that's going to move oil significantly. So I think we're going to see oil much higher in the future because of inflation, because a lot of things going on around the world. But before they take it higher, it would make sense to me to run it into the sell side liquidity pool. So if I was making the market for crude oil, I'd run it into the sell side, reject it, reprice it higher, and then run it to the levels I'm thinking it's going to go, where I think we could see oil in triple digits and then beyond. Not, 1,000 a barrel, but beyond in terms of once we get to 100, we could start to see much more acceleration on oil with everything that's going on. So what I'm looking at is before we see that move higher in oil, it's very possible we could see a run into sell stops first. So that's what I'm looking for in oil. This is like the draw on liquidity. So if you guys would envision it like a magnet is just pulling price down into these equal lows. And then that's my short-term target for crude oil. I was thinking I could have positioned myself for a little one shot, one kill, just right into those equal highs, bank some partials there, and then, see what it wanted to do from there, but it wasn't having that and it sold off. So they left these equal highs. I think that's going to be in play later in the year, but right now we have to take it day by day. So we have these stack lows here, here, and here. So I just want to see a nice low resistance liquidity run, melt through that, and then run deeper for, we could see oil in the 60s. Yeah, so looking for oil in the 60s as low as 61.74. So that's what I'm going to be looking for moving forward on crude oil. But again, a lot of this could change with things going on around the world. For all I know, we could just have a jarring gap open and crude oil could gap up $3 above market price, $3 below market price. Who knows, especially with things, the way things are going on right now. So I say all that to say as well, the analysis I've given you guys, that can all change at the open. We can gap up 300 points on the NASDAQ. We could gap up, gap down 100 points on S&P. And if and when that happens, I'm going to have to adapt to that. So although I am giving you analysis in the present structure, that can change at open depending on how market makers want to use that opening for the new week opening gap for sentiment purposes. So just some things to, again, keep in the back of our mind. And there's a lot of things to consider. Again, we're trading in a very difficult time with everything going on. There's a lot of things being thrown at this market and a lot of things to consider. Yeah, see, Dylan, don't you find it suspect how the NASDAQ was the strongest throughout this entire rally is now the one failing to make higher highs, especially being the most tech stocks index futures, and this whole rally is fueled by tech stocks. Yeah, that's something I'm monitoring as well. Seeing NASDAQ lethargic. I'm not calling it an SMT yet because it's too early for me to qualify that. But if we do sell off, I would want to see some type of SMT at the highs, meaning one of the averages fail to make a higher high. And then if we drop lower, that seals the deal for our quarterly shift. And then I'll know what it is I'm looking for. last thing, man, I got into the questions and I get distracted. You guys see why I can't look at the chat at the same time. All right, so we'll start with dollar. I told you guys I'd make this resource available to you guys. So let's go and take a look at DXY on a 25-year. So looking at the month of February seasonally, going 25 years back, we see it's typically a bullish month for dollar. And then we'll look at the 15-year. I like to compare these and get a different feel. And then we also see in February, it's typical for it to make a significant low at the beginning of the month and then rally up into March. So the seasonal tendencies combined with COT data, combined with the market structure, combined with the yields diverging into lows is what's indicating to me dollars going higher. So now you start to see, a little bit of the layers behind the analysis I've been giving you guys here for some time now. So that's what I'm looking at on dollar for this month. And then we're going to look at S&P and NASDAQ. So go to the 25-year. So it's seasonal influence of the month of February is to make some type of intermediate term high and then sell off into the month of March for that seasonal low in the spring months. So what I'm going to be interested to see is if we get that high manifest, right? So this is just a confluence tool. It's not the be all end all. COT, seasonal data, intermarket analysis, all those things are great tools. What tells you what that market's going to do is the open, high, low, and close, time and price, and understanding the market efficiency paradigm. Understanding that tells you where the market's going to go. Now, how do I confirm it? How do I trust that these things are going to happen? Well, now this is where I bring all my other gadgets, tools, tech into the equation. And this is just something to complement understanding market structure, understanding order flow, all the things that I teach here. So looking at this here, something to keep in mind moving forward, that it tends to create a high in February, dropping down into the seasonal spring low. So that's what I'm watching on S&P. We'll take a look at NASDAQ. Same thing. We get that same characteristic. And then if we go 15 years back, we see it tends to make a high and rotate lower into the March months, or into March, into the spring months. And then again, if we look at DXY once more, for US dollar index, we can see that it also tends to make a low seasonally and rally. So you see how these things kind of dovetail together. So just some things I'm going to be monitoring and watching moving forward. Man, I almost forgot that. Good thing I checked my notes. Would have been thinking about that all night. Eslam, hit the like button, guys. Very much appreciated. Thank you. Amy Moore, thank you for the great information. What is your thoughts on RTY? Feeling generous. Let's keep going through some comments today. RTY. And then Discord community. I have not been on the Discord much. I got on this morning. But like I said, I've been at the range, putting shots down range all day. So have not been on the Discord much. So I'll get on Discord once I get done here, and I'll look to get back to the questions and comments and messages I was receiving there. So not blowing you guys off. I just had a busy day today. So RTY, it's in a bit of a consolidation. Let me go up a time frame, see if it gives me some more clarity. Yeah, RTY is at a 50-50 place for me. What I'd look for on RTY, we have this weekly fair value gap that we're staying above, but we're also, change the color on that, in between this fair value gap. So we're really in between two key PD arrays. So what I'd look for is that confirmation on dollar to trade higher. And then if we get through this fair value gap on the downside, we're likely going to see lower prices confirmed by dollar. But right now, just the fact that we're sandwiched in between these two PD arrays and not really showing any direction. And then on a daily chart, we've been in a range bound consolidation. So not the easiest structure to peg targets in. So wait for some type of displacement on this time frame. And then I would say go from there, Amy. What's the details on signal service? All on our website, James. Jonathan Velasquez, cheers, Dylan. How many other years in total did from other sorry, can't speak. Cheers, Dylan. How many other years in total in other elements have I studied? So I came into ICT 2 years ago. That's when I first started learning ICT. but it was easy for me to pick up ICT and understand what he was teaching and what he was articulating because of the background I had, understanding the financial system, understanding macroeconomic analysis, and understanding a lot of the things I teach you guys. So I was already doing a lot of this intermarket analysis with yields, dollar, all those different things before I even found ICT. So once I found ICT, and then he was able to put COTs together, how all these things dovetail together, the smart money perspective, all those things are what then solidified my understanding to where I'm at right now. But again, a lot of credit, props to my brother ICT. Can't take that away from him. Hopefully I covered your question, Jonathan. So is SMT required in your own trading? No, I'm not going to read the rest of that, but no, I don't need to see SMT to trade. I like to see it, but I don't need to see it. All right, guys. Jonathan, do you also mind sharing what Adora? I'll cover that for you later, Jonathan. I'll get to that question. I know you asked me that once before, and I'll cover that maybe on Zoom with the community, brother. I'll cover that one for you. Richard, if you don't do everything ICT says, how do you differ? What do you think? Anita Lowe, he doesn't rant, LOL. Yeah. My man ICT can, but I can only imagine. Like, I just look at, some of the stuff I have to deal with sometimes, and I can't even imagine, ICT times 100, with all the things he gets on the internet, whatever. I'll leave that conversation for another time. Joe, thanks, Dylan. That dollar analysis cleared up what was happening on Friday, which was in tandem. Yeah, hopefully that gave you the clarity, Joe. Alistair, what is the draw speed with handguns? Have not timed it. But yeah, don't know my draw speed. What's yours, Alistair? I'd be interested to hear that. Season X, you had to pay for that info? Yeah. Yep. I have that for my company. So myself and my team of analysts, we all have access to all the services that I pay for and make available for my company. Season X is one of them. He only uses snipers for one shot, one kill. All right, guys. So that's about it from the questions. I'm going to go ahead and get going. It's about 5:15. I got a lot of other things to handle here. Matthew Davis, the trolls. Yeah. A lot of trolls, bro. And, I get it, man. It's my man, ICT. He's successful. And unfortunately, miserable people like to hate on people that are successful, and that's just the way the world works. Just a lot of unhappy people that want to make other people unhappy, unfortunately. But as you guys know, we don't have time for that. We just keep it pushing. Matthew Davis, Dylan, we appreciate you. Appreciate you, Matthew. Thank you. Richard, no, I mean, in terms of trading, how would you do things differently? Do you respect trend lines, for example? No, absolutely not. All right, guys. So that's going to be it for all the questions. I wish I could stay here all day and answer you guys' questions. But unfortunately, I'm a businessman. I got stuff to get to. So appreciate all you guys joining us. Ahmed, sometimes I get to shoot my Glock Gen 5. Yeah, I shot my friend's Glock Gen 4. Real smooth gun, Ahmed. Nice. Rich Carey, excellent as always. Brother, looking forward to an exciting and productive February. Absolutely, Rich. Good to hear from you, brother. Hope you had a good weekend. Olawale sniper on the b-ball court and at the range. Yes, sir. And NASDAQ quick scoper as well. Draw speed 1.75 handguns. Damn, that's pretty good. Yeah, I saw a guy at the range today, man. He had very, very quick draw speed. It was almost like you couldn't see it. Ahmed, thank you, brother. Catch you soon. Olawale, thanks for today's session, Dylan. Wealth of knowledge, as always. Awesome, guys. Jonathan, like, everyone. Yes, please do. Thanks for the reminder, Jonathan. Yeah, please give this a like. We had quite a few people in here. Full house today. And I'm going to be giving you guys the value for free. So again, don't ask for any money in return. Just help me out with the like button. It helps myself and my team out. And again, makes me want to keep doing this for you guys. So Anita, thank you. Absolutely. Thank you for joining us, Anita. Denisha, be safe this week. Have a good one. You as well, Denisha. All right, guys. So that's going to be it from me for this one. Hope you guys found this one insightful. And back to business in February. Looking forward to it. So I hope you guys have a great rest of your weekend. Take it easy. Good luck and good trading.